Hi, and welcome to the Market Alert for Thursday, the 30th of September 2021. So President Biden's new plan to tackle rising food prices seems to be the main headline. Anyone with half their marbles already knows how this story ends. We do. It's called hyperinflation. And inside of this article, actually, I did grab it. There it is. Yeah, and it's here. This was the bit. Empty stomachs, Evergrande's going down, and it's taking the life savings of countless good people with it. But while Evergrande is going down, food prices are going up. Moreover, they're going up a lot. And according to the United Nations Food and Agricultural Organization, the FAO, global food prices were up nearly 33% over the year. Now, anybody that's been following me on the Market Alert know that I've been talking about food price increases for the last 13 years, and they've never been going up at 1% per year. They've been going up between 10 and 17%. But now it's official, of course, and incredible. We have this hyperinflation scenario in the background that is erupting. It's not about to. It already is and has been for many years, but now it looks like it's on steroids. So goodness knows what with gas prices, fuel prices, electricity prices, just at the onset of winter in the northern hemisphere. I dread to think how the winter's going to pan out. But there's no inflation, according to the government. And then it gets better. It just gets better. We are absolutely in the land of, well, the twilight zone is the only way to describe it. If Trump had made this comment yesterday, then he would have been ridiculed throughout the whole of the mainstream media. Biden says it, and it's just absolutely ignored. Fact checkers replaced by unicorns, absolutely. But after Biden tweets, "My Build Back Better," there's that phrase again, agenda costs $0. Biden's $3.5 trillion Build Back Better plan actually costs nothing, says Biden. Well, it might not cost the government, it's certainly going to cost the taxpayer, but he said it's zero. To watch this buffoon actually try and justify this, it just, honestly, it leaves you speechless, but well worth watching. Honestly, you'll end up laughing because it's beyond ridiculous. This is where we're at, folks. This is where we're at. Biden breaks the book Dollar Tree forced to hike prices amid soaring inflation. That's obviously some sort of like Poundland shop or something for the US. I'm not completely sure that. We believe testing additional price points above $1 for Dollar Tree. Yeah, so it sounds like it, doesn't it? I would say that, how much does this cost? Well, it's a pound, that sort of thing. But yeah, so, I mean, they're going to be $2 shops before long, or £2 shops. All about yields as well, and this is terrifying. All about the yields and why it is different this time, because rates do matter. They do matter. And if you have a look at this here is, we've not looked at this for a long time off from stock charts. It's the yield curve. But we can see the interest rates in this graphic here, and I'm just going to wind this back to 20th of March last year, or around that sort of time. And you can see that, if we look at over here, you've got when we had the pandemic hit, the stock market moving lower, etc. And then this is the S&P 500, by the way. But as I move forward, just watch the yield curve, and you'll see across the board, from the 3-month all the way out to the 30-year, they're all rising, dramatically rising from this point when there was an inversion at the short end. So yeah, there you go. Ever since the printing of money, inflation, hyperinflation, it's not going to end well. It's not going to end well, is it? And what else have we got? We've looked at that, haven't we? Yeah. Okay, so a quick look at the implied volatility. This down slightly yesterday from 1994 down to 1804 as prices move higher in the stock markets. And in the news today, we've got final GDP, which is going to be an interesting one. Unemployment claims at 130. It's forecast 6%. Where did they get these figures from? God, that's la la land, that is. Chicago PMI and then Powell's going to be speaking, and all the other members as well from 3 p.m. So again, expect the metals to be hammered at 3 p.m. and the dollar move to the upside. So let's have a look at where we are in the markets. We'll start off with the Dow. This is the daily chart yesterday. Moved lower, found support at the 50% retracement, and then bounced off this at 230, and is continuing to move back to the upside. Incredible, isn't it? Well, with the hyperinflation, interest rates rising, 3.5 trillion in debt to be printed, plus the government closing down, the debt ceiling not being raised. I mean, it's the perfect storm, and yet the Dow is moving back to the upside. Incredible. Honestly, you're reaching the point, and I'm sure you are too, where there are no words anymore. There are no words for the actual detachment from reality with all this stuff. There really isn't. So there's the Dow for yesterday, and then Powell spoke, and it brought the market back, and you've just got these 89% retracements, and then the market moving back up. Same in the DAX. Let's have a look. I'll just get the right chart. Daily. Again, you can see this retracing more, came down to 62%, more or less the low of the previous day yesterday as well, and then moving back up above the 50, or heading towards the 50 at the moment, struggling at the 5-bar moving average. But we certainly have got a change in here where we can see there's a bit of a downtrend there. It's certainly volatile when you move the chart across. I mean, there's some volatility there, which is good, but yeah, they're doing their best at the moment to try and bring the market back, of course. So yeah, in the 30-minute, we see the market moving higher. It took some getting going, a bit of a struggle, but initially, after this, the market moving strongly to the upside. You've got your double top retracement, and then following the Dow, it moved lower in the afternoon session, which we'll see in more detail in just a moment. But then since then, the market's managed to come back to the previous day's high and the R1 level at the moment. So let's have a look at the metals. These were monkey hammered yesterday, but no surprise if you've been following the market alert, because as I've said before, I have an order down at $20 to buy, and we're heading in that direction. We're now below 21.50, and if I just scrunch this up a bit, you'll see that the $20 level is down here. This is where it's going to be, in this area here. So I'm still expecting the market to go down to this level before we actually see any sort of support coming into the market. And we only have to look at the gold silver ratio, and you can see yesterday this shooting up to 80, and the reason for that is quite simple, because if we go back to this chart and we look at the price of gold, barely moved to the downside. Again, silver being hammered by the manipulators in the banks, and as I've said before, for many reasons. Once they go long, it will be astonishing how vertical the price of silver will be, but until that day, it doesn't matter. I don't care what you see on YouTube, and I've said this from the 3rd of February of this year, once the price got to close to $30, that they would crush any silver buyers until they were ready to move the market. It doesn't matter if anybody talks of triple-digit silver. I mean, accounting for inflation, yes, I agree. It should be over $100 an ounce. And at the moment, given that in 1980 it was $50 an ounce, sorry, did I say 1950? 1979 it was $50 an ounce. Then, and now it's 21.50. I mean, you can see it for yourself. So it's it's 60% less in price, more or less, and it's 40 odd years later. So there you go. Incredible, isn't it? So it's seriously undervalued, but it isn't going to go anywhere till they allow it to go anywhere. And the same with gold. They'll all be buying it behind the scenes. There's no doubts about that. I mean, how could you not buy it? I mean, you've got something that is 60% cheaper than it was 40 odd years ago. So it's just a no-brainer, frankly. But that's, when people look at this, become incredibly despondent and miss the opportunity of the longer term opportunity. But it might not be so longer term now, as everything starts to unravel in the background that we're seeing at the moment, particularly with hyperinflation, especially going into this winter. So you can see what happened yesterday. I mean, they just absolutely ramped the dollar straight through the resistance. And again, when Powell speaks today, no doubt it's going to continue higher, and the price of silver is going to be hammered to the downside. And there you go, we're just starting to see that now. So yeah, I wouldn't be at all surprised if we don't head down to the $21 level by lunchtime today, if not before, because that's the goal of the banks, to do that, to crush the price so that they can get out of their massive short positions and then reverse the market when it gets to a price where they've made billions, and then switch sides and go long because it's dirt cheap. That's the way it works. Okay, quick look at yesterday's activity in the 2-minute chart. The market gapping higher, moving higher in the 2-minute futures at 7 a.m. Prices then trying to move higher, but slammed as they traded to the DP, and then managing to hold above the 5-bar moving average until we find some sort of topping out activity here, coming back 78% before the market then trades sideways to lower. We had a short there down to the DP. It's a quick scalp trade because you can see the prices coming off the low, sitting at the DP, a very important level, as we know. Prices above the DP are bullish, below are bearish. We had another short here, another attempt through, which we see there, and then closing back above the 5-bar moving average there to exit the trade. I just forgot to mark up the trade markup on the chart again there. And then sideways to higher through the mid-morning. We had the news at 3 p.m. for pending home sales, which came out massively. Let me just bring that up for you because it's worth a look at. I couldn't believe the figures when I actually saw them. So there you go, pending home sales, 8.1. So more inflation. -2, 1.1, 8.1, and again that just bolstered the dollar, sending it higher. The Dow moved lower to begin with, the DAX following it very nicely there, which is odd because normally the market doesn't, the DAX doesn't generally follow the Dow initially on the afternoon session, but it did yesterday, and then they brought the market back very, very quickly. And then we had a short here which failed, as they wanted to bring the market and continue prices to the upside, and this trade just managing to pull back the majority of the loss. And then we had the crude oil inventories, and that was an interesting one as well. Let me just go back to that because you can see we've actually got a surplus of 4.6 million barrels. So there's no pressure on the crude oil market. There's no draw, as we saw on the previous week, of minus 3.5. So now we've got a surplus in crude oil. And again, this information was just used to move the dollar higher once more. And then as we went on, of course, we had Powell and the three amigos speaking at 4 p.m. Okay, that will do it for this one. Let's see what happens today. Like I say, expect the metals to continue to be under pressure because it allows the pros to actually accumulate at lower prices. That's it for this one. As ever, thanks for watching. See you.